of a powerful evolution. Lexus, pursue the moment.
David Burrows is here from Barometer Capital, North American Large Caps. That's the focus. And Tony's in Toronto. Welcome to the program, Tony.
Hi, thank you for taking my call. David, my question is about C&Q. It kind of took a hit down from $40 to around this level, $31.80. You have the price of oil going up today, but looks like the stock is going down. I got in around the 33. Is that you can say, is that a good price, a good entry point? And yesterday they came out, they said they're going to buy 55 million shares of the stock. Any comments? Thank you.
Sure. So in disclosure, in our long-short fund, we're short CNQ and have been for some time.
So you expect it to fall further?
So we're expecting it to fall further. The big problem right now, Tony, is, this is a very good company. They got great assets. The problem is structurally in the North American energy market right now, these folks are having to sell oil at a low price. Certainly Canadian crude is selling at a discount to WTI, which is trading at a discount to Brent. Excuse me, and the heavy oil is trading at a discount to Canadian crude. So you've got good, strong production, but you've got a difficulty in marketing at the right price. Second thing is that there are a number of refineries down currently, and the third thing is many of these oil sands companies are higher cost entities, so when you do get a discounted price for the oil, it has a significant impact on the profitability. So this group is out of favor, the whole group is out of favor. And in fact, forget about oil sands producers, forget about gas producers, really all of the energy producers right now are out of favor. It's just not timely currently.
I'm also looking here at the short positions, generally speaking, and almost 5 million additional shorts were added on top of this stock at the tail end of last month at about the 32 and change mark. At what point do you start thinking about covering that short position? Because the 52-week low is 27.25.
Yeah, it's interesting. The difficulty is that we've had a lot of international money come to the Canadian market over the last number of years, as resources have been a key theme. When a leadership theme rolls over, it can roll over for a while. And it's not for me to guess at where the lows can be, but at this point, we continue to see behavior that points to lower prices. This morning you get a bit of a bounce in resources off the open. The stocks, the metals, the energy rallies a little, but they've been giving it back steadily through the day. That's not generally really positive price behavior.
Tony, thanks for the call from Toronto to Barrie now. Mario, thanks for holding. Welcome to Market Call.
Good afternoon.
Good afternoon.
Osisko Mining. It's a Canadian-based company based in Quebec, where they discovered that between 5 and 7 million ounces gold. The mine is completed. They start production, and they promise to produce between 620 and 650,000 ounces a year. I was just wondering if this is a good entry point. I'll hang up and I'll listen to the question, and I thank you.
Short positions building on this one too.
Yeah. Of all of the sectors in the Canadian market, the precious metals is the most under pressure. So, we have about a 10% short weight in precious metals in our long-short fund. In Canada, we have become used to resources being a leadership part of the market, and it's just not right now. When I look at what that's telling us, it's telling us that the view on global growth is not overly rosy. The marginal dollars of demand for commodities just don't seem to be there. And so then you get down into the producers of gold. You've got a situation where in a year where price of gold went up 20%, the total reserves for the industry went down by 15%. So they're just not finding enough of this stuff. Now, so Osisko may be a wonderful company, but 80% of return is getting the market right and getting the sector exposure right. And you're fighting the tape in the sector at this time, and there's a lot of people and there's a lot of funds who have built big positions in these companies who are now facing losses. And so you're facing a lot of selling pressure in the group, and it's a bit like swimming upstream.
All right, I want to see if there's a better way for Mario to play into this, because as I mentioned, the short positions are remarkably high on Osisko right now. The 52-week low is about the $9 mark. I wonder if short covering would kick in at about that point. And the reason why I'm asking is because there's so many shorts on Osisko right now, it would take more than 8 days to cover. So you would have 8 trading sessions of gains to cover that, so you could get in low and ride that higher. Is that a reasonable thought?
So there are people who will do that, try and pick bottoms and buy low and sell high. We have found in general trying to pick bottoms is a dangerous game, especially when you've got a lot of underwater buyers overhead of you. I would prefer to see price behavior turn and start to behave a little bit better before we would put money to work in the group. But there are bottom fishers out there who will say, well, based on my valuation of this company, market's wrong, I'm right. I don't like to fight the tape in the market.
All right, Mario, thanks for that. We go from Barrie to Collingwood now. Hi, Dave.
Gentlemen, good afternoon to both of you.
Good afternoon.
David, as you're well aware, the TSX as of right now is up less than 1%. So my question is on ARC Energy, ARX. It's our third largest holding in our portfolio. A lot of analysts are saying that natural gas is going to go down to less than $1. First part of my question is the dividend safe at $1.20 a year? And secondly, should I sell and buy back later in the summer if natural gas does go down there?
Right.
I'll hang up and listen to your comments. Thank you.
Right. So this is a tough position to be in because clearly they're not covering their distribution. And with the price of gas in free fall, we don't know where the bottom is, and I don't think anybody does. There are a lot of professional investors who have built positions early in the year in resources, hoping this would be the sector this year that got going, and they're now all underwater. So there's a lot of natural sellers in here, and the problem that you face is that, you know, how low is low? There just isn't the infrastructure to get all the gas that's being found to market at the right price. So this could take a while. Now, there are more savvy value investors than us. We're not value investors. We don't try and buy something cheaply thinking that the market will sooner or later get it right. So we just, as a rule, don't try and buy things that are falling in price. At this point, you know, the stock has come down a lot, but frankly, you know, if gas prices stay weak, it can continue to come lower. You have to pick your exit point, and I would just use a stop. Pick something where it's your line in the sand. But this group is in real difficulty right now, and I think that you want to be very, very careful having too much exposure. I don't think you can rely on that dividend.
Dave, thanks for that. From Collingwood to a break. When we come back, we'll talk about one of Canada's biggest gold diggers with David Burrows, president of Barometer Capital. Call us toll free if you've got a question about North American large caps, 1-855-326-6266.